Hey everybody, DayTraderRockStar here. In this video we're going to be going over the RockBot script, how to download it, what we use it for here at Day Trading Radio, how do you get it, and some important aspects of it. So as you know, I'm DayTraderRockStar. I do a broadcast each and every day live on Day Trading Radio where we trade the markets. We trade futures, stocks, and options, and like I said, I've been on the air since 2007, so feel free to head over to DayTradingRadio.com. When you get to DayTradingRadio.com, you could actually see everything right here on the site. It tells you all about the site, different things we do here, the Futures Alert Network system, some of the packages we have where you can watch the show. For the members out there who are familiar with who are members and have the RockBot, we're going to jump right into it. When you log in here, this is the first part when we log in to your dashboard. Now I have it off right now because I'm doing the video. So we have this is your trader's dashboard. Over here you have a trade alert box where we do our trades during the day, and you get those instantaneous live alerts right here. Again, today we bought and sold DocuSign on the news. Yesterday we were in Costco. I was in Uber, sold some Uber, stuff like that. But anyway, when you're logged into your dashboard, this means that you're in the membership section of Day Trading Radio. And if you have the RockBot on your package, the RockBot script on your package that runs on the NinjaTrader platform, you're going to go down to the lower right hand corner here where it says RockBot NT add-on. So you click on that, and you're going to see a nice little page here. It gives you a nice description of what the RockBot is, and I'll put that in the description on the bottom of the video here, so you can actually read up on it if you're not familiar with the RockBot. But those who have the permissions to it will have access to this link right here, which is our RockBot code. All right, so you're going to go to that link. You're going to click on the RockBot code. And you're going to have a directory here. Let me move that over for you. And this is your directory right here. And this is the RockBot. So you click on that. And then we have a bunch of files here, or folders that you could. So we have my template. If you want to actually upload the template of the RockBot latest version, and the Super Signal by 23. Now the Super Signal by 23, I recommend everyone using that. The other versions in here, we'll go over those in a second. Here's some download instructions, some template instructions, some other things that you'll find helpful on that. But when you want to download these, what you're going to do is you're just going to click on them, and what's going to happen is they're going to go up into your download folder. You click on that one, and you click on this one, and they're going into your download folder here. All right, wherever you have your downloads go at that point. From that point on, now that you have them on your machine, you're going to go over to your NinjaTrader platform. You're going to go to your NinjaTrader control panel here. Up here you'll see new, tools, workspace, connections, and stuff, and you want to go to tools. All right, open up the tools and then go to import. And you click on the import, go to NinjaTrader add-on. That's going to open up a folder for you. They said where you and most likely it's going to be in your download folder. And you're just going to click on that, and you're going to open it. It's going to import into your NinjaTrader. You're going to click on the latest version, the two that you just downloaded. I have a lot on here because I was showing people. I do help people download this, members, if you need help. And once those are uploaded, you just click that, and then they should be into your NinjaTrader platform there. And if you want to make sure they're there, what you're going to do is you could just open up a chart right here. Say we're going to be using it on, we'll say we'll use it on the MES right now. Open up a chart if you have a chart open. Right there. And then you're going to go to right up here is where your strategies are. This is the second box over to the second icon over from the right. Click on that, and that'll give you a drop down of the different strategies that you have available. Now with the Rockbot codes and the scripts and codes that you get, you'll get a couple different ones. You'll get actually quite a few. You're going to get the and again, some of these are mine that I'm working on, and some are being built. So you don't get all these. These are some experimental ones that I'm working on and stuff, but you will get all the completed ones. The bigger one that you're worried about, or not worried about, but you want to be, is the Super Signal Quad. So that's one that you're going to get. You're going to get the Rockbot Bear flag and the Rockbot Bull flag. Now, you don't want to run these all at the same time, but I'm just showing you. I'm just bringing them down so you know. The Rockbot Bull flag. That identifies our 2020 Bull and Bear flags. We have our Thunderbird 23 buy, which is our standard divergence signal. We have a Thunderbird 23 short, which is our short signal divergence. And then we have one here that's called a quad rotation trail 60. And that is just a quad rotation. Don't worry about the name. It is just called the quad rotation for a reason. I'll show you why in a bit. So these are the different scripts you're going to get with the packages. You get all these scripts, actually, all of them. The one we're going to just focus on today this is the important one. This is the Super Signal. The Super Signal is actually a combination of the Thunderbird 23 buy and the quad rotation. It's two scripts combined to give you what we call a Super Signal. And let's go over that. Now each one of these is going to have different parameters. So whatever one, like if we have the Super Signal, you're going to run the Super Signal. Right now the parameters are set at 6, 2, 15, 2, 14, 8, 8, 1, and 5. These are defaulted in there, but these could all be changed by you. And this is the important part of this. This is super important for newer traders out there, traders that never worked with bots, algorithms, things like this. These are meant to be adjusted to market conditions. All right, this is very, very important. It's so important, and there's a lot. There is a learning curve to this. Understanding when to use certain parameters, when to increase your stop, when to increase when to use the signal bar low, how to use the tick stop. So again, each one of these take profits ticks. That's how many ticks. And again, this is built for the futures contract. But consider it, if you're going to use it for stocks or Bitcoin, consider a tick a penny. So if you were going to use the bot to trade like Intel or Apple or anything like that, then you would say, all right, take profits after 50 cents or $1. Then that would be 50 or 100. All right. If it's futures, then you really want to keep it as it is. This is 6 ticks. ES contract is 4 ticks to a point. Each tick is 12.50, and each contract, each trading vehicle has different values for that. If you trade in the NASDAQ or the Dow and stuff, they'll all be different. But so right now it's set for 1.5, and then it takes 2 contracts off. And then the second target, it's set for 15 ticks, and then it takes another 2 contracts off. And then it's set at a stop loss 14 ticks. Now remember, the stop loss ticks here is very that is going to be active if this is set on ticks down here. Stop loss type is ticks. If this is set on closing signal bar low, right here, signal bar low, that's set on signal bar low, that means the stop will automatically be placed at the low of the setup. So this is a divergence setup. When we have that, when I first built these were built for divergence, lane divergences. And so the divergence stop is always 1 tick underneath the divergence low. So if you're using it for divergences, keep it on the signal bar low. or you can keep it on the stop loss ticks to make it more sound, because sometimes you can have a big wide candle on the, you don't want to have too big of a wick down and have too big of a stop. So but I've been using actually ticks, and I've been using 14 ticks right now as my stop. All right. Trailing stop is really good. I mean, that just sets a trailing stop after it goes up 8 ticks. You get a break-even trade, meaning a free trade. If you want to go up 6 ticks and then set your trailing stop to 6, it means your trailing stop will activate after the first profit target is hit, and then a 8 tick trailing stop will take place. But if you want to have a break-even trailing stop, you just make that 6. So if this is 6, you can make this 6 and this 6. That means you have a break-even trailing stop. All right. And then don't have to worry about the trailing step ticks. That just follows up 1 tick at a time, and that's what we like. Don't even worry about that. And then again, whatever count you're going to be setting it on, all the other things is all set in stone pretty much. And then you just want to activate, enable it. And when you enable it, it's going to show up on your chart, depending on what time frame. And I click on that. Let's see, I think I had it. Let me go back over here for a second. There it is. It's calculating. Now that's on the daily. I want to actually move this over to what we're using is on the 300 tick chart, but you can use it on the 5-minute. I recommended using it on 3 different time frames, or the frames. This is the time frame is the 5-minute, or you can use it on the 300 tick or the 1000 volume. Those work excellent, but you can experiment with it. So we're going to just show you on the 5-minute. If you click on the 5-minute, it'll recalculate. And what it's going to do is it's going to place the divergence in where the setup was. So there was a setup here, actually. Let's see, we have the super signal on there. Why isn't there a blue line there? Let me see where the blue line is. First thing I want to do is, you don't want to put all the scripts on. That's the one thing I have here that's kind of interfering with everything. So you don't want to have all these, because they overlap and they're using some of the same indicators, and it will cause everything to go haywire. So make sure you have a clean, fresh start each morning when you come in. You want to make sure you restart your NinjaTrader, make sure everything's fresh. Again, don't let the bots run overnight. It's very important. You don't have any control over what happens overnight with futures and stuff. So all I want to do is just bring that all the way down. Then I'm just going to take the super signal quad here, 23. I'm going to drop that down here for you. We'll just keep this as a default. We'll move this to 6 ticks. We'll move this to 6 ticks, so we have that break-even stop. Keep it on Sim 1 right now, just to let you know, and we'll keep it on the MES. We'll keep it on, let's keep it on ticks, 14 ticks. All right, so we're going to apply that. And then it should show up on the top here. You'll see it on the top. And you'll see that blue line because of the blue line represents the quad rotation, and then the divergence overlaying it. So when you have a setup like this, you're going to get a, and again, this is on the 5-minute time frame. So the 5-minute, you're going to have a divergence, and you can see a slight divergence here. Again, you have to understand what the divergence represents. The formula on a divergence is, and I'll show you real fast. But at this point, you should know what a divergence is. We've been teaching that for a long time. So, all right, the buy side divergence is basically, you make a low, that's stage 1, it pushes up and it comes back, makes a second low, but the stochastics make a higher low. So, and again, this could be, we look at this different ways. We look at this as a mathematical divergence, this line and this line, there has to be a slope between this line and this line. Basically, this turn back up, this pivot area has to be higher than this low. This low has to be higher than this low. This low has to be higher than this low, or this lower low. Again, that's what a divergence is. And it can be different times. It could be a very low one. It could be a high divergence. And remember, these are different type of divergences. But the mathematical, definition of that is we're going to have a low with a low. Market's going to move up a little, then come back and make a lower low. But the stochastics are not going to retest that low and not going to get back down to those lows. It's going to make a higher low. And that is our divergence signal. And a stop goes underneath that low typically on a divergence. That's what we want to do. Now, with the setup here, let's see, we can go back here. Now it's on the 5-minute time frame, so it's a little bit. Let's go back here. So sometimes the 5-minute doesn't give you as many setups, because what we're looking for here. I'm going to zoom out here. What we're looking for here. There we go. That's a better view of that. We're looking for a combination of different things. We have our stochastic bands here, and what we have with the quad rotation is all 4 stochastic bands. Even though you're only looking at 3 here, there's 4 that are in the formula. All 4 of these are going to have to be oversold, and then you're going to have a divergence. So, and that divergence will be a higher low, and sometimes you might not even see it, because lots of times you'll see that candle come down, take out the lows, but the stochastics will be a little bit higher mathematically from here to here. Now, this is just something that automatically is going to trigger, and it's going to trigger. You're not going to see these, and that's a great thing for a bot to get you into a position and not see the divergence and then see the big move off of it. But also the combination of having all the momentum indicators ready to turn in your favor is going to give you that upside bias. So as you can see, these things, when they do trigger, they really do rip higher. So these are great order entry indicators. I mean, and I like to let these things run and let it get me into a trade. All right. So again, this is the 5-minute time frame, and this is based off the time frame. Now we also like using on what's called a 300 tick chart. The tick is basically a trade. And it's going to be a different type of chart. Each candle is going to be made after the criteria is met. 300 trades are going to be met. Then a tick will be. Then a candle will be placed on the chart. As you can see, we had a nice little buy, and you could have a divergence with that same thing. The divergence is going to read differently than a time divergence. But you're still going to you have a low here, a lower low here, and this is probably a little higher low from back over here. That's why you're getting that divergence there, and a nice little move up. Now, if you zoom out, you'll probably get some bigger setups here. Now, I want to show you, see how this is kind of choppy here, and you get a little move, but then it chops around, and then it gets the bigger move. This is the key to understanding, using different scenarios on the bot. Even though this was choppy, we were very close to getting that low. It didn't get a full rotation. All right. I want to show you something here. Again, you can see how we kind of chopped up here, and this is important. We're going to go to the parameters here. I want to change this over just a little, because remember, what's great about the super signal is it's usually at the lows, at a short-term pivot low. A pivot low or a pivot is where the market makes a directional change from one direction to another direction. If it's going down, then it'll go up. If it's going down, then it'll go up. If it's going down, it'll go up. And lots of times it'll chop around that pivot. Sometimes it'll explore a little bit lower. And if things are not, it's kind of tough to have a tighter stop there. So I tend to like to give it more room here. So sometimes you just want to back test this. And what we're going to do is we're going to go to that. And just remember where this is. Take a look at this. You see, we just kind of got stopped out there. It just didn't get full rotation. It came down, and then it ran. So if we had this up, change this around just a touch, and instead of having it on the on the 14 ticks. If we just moved it 2 more ticks, a half a point, it makes such a big difference. Probably, I have to say. Then now you have a much bigger move here, and actually because it has a trailing stop that's set to go off, that also makes a big difference too. You know, you had a trailing stop that was going to trigger after six ticks. But as you can see, even back over here, we got the super signal. It kind of went up. The trailing stop came in. It pulled back. It chopped around. Same thing here. It went up. Trailing stop came in. First target hit. Never got up to the second target on these, which is fine. You know, these are short-term scalping moves. This is a scalping indicator. That's what this is based off of. It's based off of short-term divergences, whatever the chart is. If we put this on a daily chart, you know, you probably find daily divergences, and they would go, and again, these candles go about 4 or 5 candles. Well, I usually call it 5 to 7 candles as a rotation. So if it's on the 1 minute time frame or the 300 tick time frame in this case, but if it's on the 1 minute time, that really depends. The time could be anything on this. That could be real fast or it could be real slow. But if you look back at it, you know, you give it a little room, it'll get through these little pullbacks and then give you that bigger move. Here was a bigger pivot. Most of these setups here, if we take a look at the downward channels, that's what this represents. A downward channel. This represents a downward move. You know, these pivots, it's actually popped here and then pulled back and popped a little further. Again, this is on the 300 tick. Again, you could probably even call it a bigger move here. In some cases, you could even leave just a stop at the lows and see where that thing goes. Stop at the lows and see where it goes. Again, this is set to take faster profits, and that's the way it comes out of the box right now. It's to take profits. You can have this set up any way you want. All right, but the object is, of course, is going to give you the best entries. It's going to get you in on these pivots. Now, controlling these and managing your trades, that's where you come in. You know, that's where knowing the market conditions, the time of the day, if there's any news in front of you, you know, all these different things are going to play a part. Because these things, if I just wanted to, and I could just, you know, here we have an example here. This one didn't work out. This actually kind of failed. But you have to be careful when you do get selling in the market. If there's news out there, like at 8:30, I think there was some news that came out at 8:30, and the market sold off. When the market's aggressively selling off, you could get a trigger in there. And if that trigger doesn't get to your first profit and rolls over, you get a stop out. Now that happens every so often. You know, it happens. But we have a way of getting by that and how to fix that. In this case, sometimes it's not. You can't get by. You have to accept that there is going to be losses. This is very close to a holy grail, but it's not a holy grail. It's going to give you great entries, but you have to understand there is no perfect. There's always going to be some fluctuation in the market, and if there's news, that is the key, is understanding market direction, and if there is a bias, a very strong bias to one direction or another. All right. So we had a nice pop there. It did sell off hard. Then we finally got a spot here and we moved up here. Now again, if we adjusted these parameters and let these things run a bit, you can see a much different return here. Let's take a look at this. If we could adjust this, apply that. All right, so this is, again, trailing stop, very tight, very, very tight. Only 6, that's why we're only getting little moves. Now, if we adjust this a bit to, I like to adjust it to like 14 and give it a little room to run. Let's see if it changes things up here a bit. Oh, yeah, look at that. So not taking just profits here, it went all the way, took it all the way up here. We got it all worked out here. Still have a good trailing stop there, but now you're starting to really recognize those profits. But as you can see, all the perfect areas are being hit. It's a combination of everything. This is the number one script I have right now. It's called the Super Quad 23. And again, we could probably even set that up. If you wanted to catch that move, and you said, "Oh, this has happened right at this is overnight actually trading. This happened when the market opened back up and it just rallied all night." Trailing stop came in at 70. Probably had 2 more points on there. And a nice move up. Let me see. I'm just going to experiment with this a second, all right? If we go back out here, open that up a little, apply this. Let's put 20 here. I just want to say. Did I activate it? I don't think I activated it. Nope, I didn't. Apply it. Nope, still got caught there. So you have to have a pretty wide trailing stop to be able to capture that. But of course, I mean, it's doing the right thing here, taking profits on the way up. You would like to probably get back in it here manually. But I always want to show you if sometimes you could adjust that and try to capture the bigger moves. But you know what? Let's take a look. Let's adjust it a little bit more. Let's just see if we can capture that whole move. I mean, so 25. That should probably catch it. No. Oh yeah, it did. All the way up here. Look at that. So it captured it all the way, went all the way up here, and then finally got that trailing stop right back here. But I prefer, being a little safer, trying to manage that trade ourselves. Let's not keep it on that. Just trying to give you an example of, adjusting these a little. I think 15 is pretty good. Even if it doesn't give you everything, you could always adjust this, and that's how I want you to use it. I want you to. This is a great order entry indicator. It'll get you in on the big levels, and then you manage it. When this gets you into a trade, it's going to place your, it's going to have your target, and it's going to be able to follow it up, and you're going to be able to adjust these. You're going to say, all right, this looks pretty good. My 60-10 stochastics on the bottom here are pointing up. I think this is a big rally here. So maybe you want to adjust your stop, and maybe move your stop off. Take your stop off and just manually control it. This is great to get you into the trades. This is absolutely, because lots of times these things you won't even see them, and the things will just explode out of the gate. Again, here is you have a kind of a dropping market here, and this is something we want to talk about here. This is something that. Let's show you something here. I want to show you something. You do not have to keep this at 6. You could adjust this. If the market is not giving you your rotations and it's in a downward trending market, this is important. The market's trending down. You typically don't want to be buying on a downward trending market. So that's why this is a tool. This is a tool to get you into positions in a nice choppy market. But if the market is, the bias is to the downside, and you try to buy it and you don't have your parameters set, you're probably going to get stopped out. It's not going to hit your ticks. You're not going to hit your profit areas. All right. This is a good example of that. I just wanted to see. We'll leave that on there for a second. I just want to show you. So you get a signal here, and it basically just goes sideways, and nothing's really going on here. All right. Now, I don't have this programmed in yet, but this is the key to success and overall trading. All right. You have a signal there. You're oversold, but you're watching a couple things here. I'm watching the lower stochastic band here, which is down here. It's at 6. Now, if you hear me on the show, I'm always talking about the 60-10 stochastic, and that's our overall bigger indicator if we're going to how the market's reacting to the the bigger trend. And if this is under 20 and under 10, and this or over say 85, 90, then that trend is going to continue. And that's a strong trend. And when you recognize that strong trend, and you're underneath that, and in this case, our line here is really the 20 line. I have it way up here because it's really, this 20 line is see this, I mean, you can't even fit it in there. It's just so flat line here. This is actually the 20 line, that blue line. You can't really get a gauge of the whole, there it is. It's a little bit better because we zoomed in on it. But if it's underneath that 20 line and the market's selling off, and what happens is, this is, again, important. This is the key to not getting run over on anything like this. And the reason why you need to manage this, this is going to get you into positions. And normally, if the market's too weak, you should be able to see that. The 60-10 is going to be your if it's under the 60-10, or the 60-10 is under 10, under 5, lower the number. If it's 5, 2, extreme weakness. Anything under closer to 0 is extreme weakness, and it's going to continue that way for a while. All right, then you have to understand that a buy signal is not going to go up. The best thing you can do is actually see some sideways action. It's actually fighting to go sideways here. And the key here is watching our stochastics here, our 9-3 stochastics. If we end up being down underneath 10 here, and you get a rotation, and your 9-3 stochastics, and this is on the 300 tick. This works best on the 300 tick. 300 tick or the 1000 volume. This is important. If it gets over the 80 line here, the 80 lines, you have the 20 line and you have the 80 line. And if it gets under over the 80 line, and this is staying under the 20 line, the lower the better. If that's under 10 and this gets over 80, that is probably the high that you're going to get. That you're not going to get too much higher, and you should abandon your trade or take whatever you have on that trade. You might even have a few ticks. But that's the discipline that has to come in. Now, I could eventually code that into it, and if you guys are coders out there, I would always pay attention to this little knowledge nugget here. If you get the rotation over 80, this is under 20, most likely the trend is going to come at this is what we call a bear flag. This is our bear flag formula. All right, the 2020 bear flag and the 2020 bull flag. This is the formula right here. The fast rotation up, the embedded stochastics on the bigger time frame. So at that point right there, you should be out of it. So you're not even really worried about taking that loss. You're actually going to get a little profit there. Same thing here. Markets here gives us a trigger, and this rotates up here, but this is staying underneath 20. That's your exit right here. Right here is your exit. Right where it got in, you should not be, you should be saying, all right, we're already overbought here. We don't really want that entry. All right, we don't want that entry there. All right, so, sometimes this flat market here is going to give you a little chop and stuff. The downward trend is very steep here. You don't want to, take those. And if you do happen to get triggered into them, against the grain here, all right, the first one, if it rotates back up and you're not moving off of that 10, you're getting out, and that's going to save you the pain. So we've just eliminated our losses. We eliminated half of our losses. If this has a high probability of chance, this has a very high success rate. It could be up in the high 80% range in a good choppy market. Again, it all depends on the market you're using it, and you have to recognize that. It's a tool for you. But the one thing it will do is identify it's gonna lay over that quad divergence, and it's gonna lay over a quad rotation over a divergence, and to give you those two good setups there. And from that point on, it's up to, you're gonna get these moves. You're gonna get these moves. So it's good to have it get you in. I would say sometimes you might get in here and it might pull back and stop out on contracts. If you get 2 contracts up and then 3 getting stopped out, it still could give you some, it won't, you say, well, I should have took everything off there. And you can adjust that. You can adjust these things where you could take everything off, and it'll probably give you much better results. You won't, So in this case, lots of times I'll put this over here. How many contracts? This is how many contracts. The lot right down here tells you how many contracts you want to be in. So say you have 5. Maybe you want to take 3 off here and let 1 run, or let 2 run, or just take we'll take the 2 off there. Let's see. And that'll change up everything. So you take 3 off now here, and 2 comes off on the trailing stop. 3 comes off, 2 comes off, and then you don't even have a trailing stop. So you're taking everything off at the highs. You don't have to worry about any pullbacks here. The good thing is that you're getting in on the lows. Look at the entries on this. I mean, the entries are perfect. Unless you're in a downtrending market with news against you, you could run into a problem. And that's why I don't like to run these things on their own. I like you to manage them. This is the best script going right now. Now that's on the 300 tick. Let's take a look at the 1000 volume here. I'm actually looking at some of these. I'm just looking at the setups here. I love looking back at it. And again, just this could have been, if you had this could easily been, again, watching that 60-10. If that 60-10 is curling up, and you're up here and it's curling up and it's not overbought yet, there's a good chance that could continue. And you want to ride that all the way up until it gets overbought. It gets above that 80 line up here. Again, same thing. If you adjust your parameters here, you could probably, you can make these things work. That's what, the algorithms and stuff. People telling you, it's, you give you time, you can make anything work, but I want our entries to be in on our entries, and then for us to take manual control of the trades. All right, manual control of the trades. Let's bring this down to 1. That way we'll hold on to 1 altogether. All right, there it goes. See, I captured it all the way up here. Took that all the way up here. Look at these. I mean, you see what we're dealing with here. There's nothing better than this. So this is what I highly recommend using: the 300 tick and the 1000 volume. Let's take a look at the 1000 volume. All right, that's 1000 volume. Basically, you're going to see some of the same things. But again, this is volume. This is how many contracts are traded before a candle gets made. So overnight, you're not going to get hardly anything. And during the day, during high volume times, you're going to get a lot of contracts, a lot of candles. But as you can see, it does nail these areas also. So I like to have running the 1000 volume, the 300 tick, and the 5 minute all 4 charts. And if they all line up together, that's usually what I call a super duper signal. When they all line up. When you have a 300 tick and a 1000 volume and a 300 tick chart, and they both line up at the same area, because they won't. Let me show you that. Hold on a second. All right, so I have the 300 tick and the 1000 volume trading side by side. So we could have them both running on the MES. Let me make sure that's on the MES. Yes, it is. And again, you would have to set up your chart. I'm just doing this fast for the video. And I see that we had some good moves. So we'll say this was at, we had a super signal here at 844. Let's see here. Let's go back to 844 here. 844. So there's a lot more on the 300 tick. You get a lot more action here. 844. So at 8:4, all right, this was exactly at 8:43. This one was at 8:43. So we had a 300 tick and a 1,000 volume set up here at the same time. So when we have both of them trigger at the same time, that is something that I would jump in and trade the ES on. You know, when we talk about trading the prop accounts with these scripts, this is like a super signal. Even though this is a super signal, when you have multiple time frames or multiple setups, like the 1,000 volume and the 300 tick and the 5-minute all lining up together, that is extremely bullish in this case, and that's where you should really jump on. It doesn't happen a lot, but when it does happen, it could go pretty good. Now that was, let's take a look at here. This is kind of interesting here. Let me make sure I'm on the, let's zoom out here to, oh, that was that overnight trade there. That was the one we were talking about. It took off. They're both going to be, taking their own time because of the, especially the overnight trading. Again, do not run these things overnight. I mean, if you want to do it on sim, that's fine, but there's, you just don't know what's going to happen with the volume and stuff. There could be weird volume fluctuation and spikes and stuff, and that's that could get you in trouble. Anyway, want to run multiple, see how each one sets up, and let's go back here to the 1,000 volume one. Move that back over here. All right, and I can't stress the importance one last time. If you're in a downtrending market, you will get alerts. You will get some signals. But if you could recognize that down every time that you're in a 1,000 volume chart or a 300 tick chart, use your 9-3 in a downtrending market to get out. Now, lots of times you'll hit your target, but if you don't, you should get out automatically every time it gets over that 80 mark. So right there, you should be out of that trade. Even you did get the first profit, but you should be out of it. You don't even have to worry about trailing stop. Once that gets or another reason is if it starts to fail. Normally you're going to get a rotation, and that rotation is going to give you that nice little move, even in a downtrending market. All right, but sometimes you're going to get this thing flatline. If we look at, especially on the, when we're really low here, in this case again, you got that nice little pop, and you got overbought, and then you kind of drifted back down. You don't have to work. Half of this thing is being taken care of for you. I mean, this does work really well. Yeah. Trying to find, so let it just do its job. All right. So that is couple important features of the Rockbot and how I want you to use it. If you do use it, again, the Super Signal Quad 23 is absolutely fantastic. The Bull and Bear flags, the Quad 20, the Thunderbird signals and stuff, they're great, but this is, I think you can't go wrong with this one right now. And so I'm offering this one, and again, it comes with a lot of our membership packages at Day Trading Radio. If just go over there again, I showed you how to download it. If you do download it, or if you do get it, you have to send me your machine ID so I could give you the give you permissions to use it, because the code is protected. All right, so let's go take a look at a couple ways of how to get that. Again, I do have a little trial on here, but we're going to take that down. We're doing a little promotional trial. So normally it's $99, but that's so the different packages right here. You get a 3-month starter package. Now, if you don't want to use the bot, that's fine. the basic day trading radio with the chat rooms, the trade alerts, the Rockbot channel. You can actually watch this trade. We have a channel that trades, that the bot is trading on, that you could just bring up on your screen and just mirror it. And each day it runs overnight. All right, but that's a private channel on the dashboard. You just have to click on it, and it'll pop right up. So you get all that with your basic membership. If you want the bot and the day trading radio and everything connected, the 3-month starter package is $195, and that's really good because normally if you would get this monthly, it's $99, so it's $100 off. If you just want the day trading radio membership with the chat room, the trade alerts, the HBS watch list, the Rockbot channel, and the tradeometer, then it's $69.95. It's an excellent thing. Lifetime memberships on sale for $750. I would definitely take advantage of that. We can give you a discount if you pay with a Venmo. And then but you have to email me at ironaction@yahoo.com. And if you're not part of Iron, you just want to mess with it, and you're not part of Day Trading Radio, and you have your own thing going on, you can head over to Patreon here, the Patreon site, and scroll down here, and you'll see Rockbot scripts here for $50 a month, and that gives you the scripts. Remember, when you log in here and you join that, you're going to be able to download the scripts, upload them to your machine. You're going to email me at ironaction@yahoo.com with your machine ID, and I'll set it up for you. If you want the Super Signal, if you want the Futures Trade Alert Network, that's really taken off. It's only $20 a month. That gives you, a walkie-talkie on your phone. It gives you the live alerts if anything is happening. The super signals, the things that we discuss, what we call super signals, instant super signal alerts. This comes right over your phone. As a voice, I use the phone as a walkie-talkie. We use the Zello network. It's really great. All right. So definitely check that out. That's on Day Trading Radio Patreon site. And we just started that. So this is the first time we're offering the Rockbot codes on that. Not many people know about that. But rather have you a member at Day Trading Radio. But if you're not and you just want the scripts, that's one place you can download them right there. And the Futures Trade Alert Network. And that's it. So I hope you gain some knowledge off of that. Again, remember, if you're embedded on the 300 tick or the 1000 volume, and you're embedded on the 6010 stochastic, and you're selling off, and you get a signal and it's not really doing much, or you get a fast rotation back over the 80 line, that is your trigger to get out. All right. If this is heading up, then you want to hold on to it. If this is down and staying under the 20 line here, then you want to take it off on the rotation. It basically every single thing that you have to worry about is already taken care of. We've figured it out. We've solved the matrix here, and it's just about being disciplined, getting in and out, and letting your profits run sometimes. All right. That's it for this video. I'm going to be working on another video on how to set up a 2020 bull flag scalping on your NinjaTrader platform. How to set up a scalping bracket order, which is great. So we're going to get to that next. Head over to DayTradingRadio.com, and we'll see you in the markets.